Hey traders, Dennis Wilbur on the AutoPilot Trader. You know, how do you really know if it's really the bottom? I know that I've oftentimes wondered that, and I want to show you some chart patterns today that'll help you understand that the bottom isn't necessarily a bottom. So here's some simple tips that'll help you find higher probability triggers for when it is time to trade after a significant downturn or bear market. So let's go ahead and get into it right now. So, you know, Jesse Livermore basically saw this phenomenon probably first, or even Charles Dow may have been one of those, but Jesse said, do not take actions with the trade until the market itself confirms your opinion. Oftentimes, as the market does make a new low, or it's in a bear market and it's digging down, making low after low after new low after new low, we get really impatient, try to buy that bottom. Buying the most recent low can oftentimes be very painful because timing is everything. But being a little late to the trade, get used to that, is insurance that your opinion is correct. In other words, don't be an impatient trader, as per Jesse Livermore. So let's go take a look at what the heck am I talking about here. As we've seen here recently, the market has been doing a meltdown, okay? It's been falling, you know, doing different legs down, and it finally hit a level of support here. So it's right there, and it's starting to bounce. And so we did a reversal day to day, which is, and we're going, hey, yay, we're going to get a trade in. Let's say you missed all this, or you wanted to see it reverse first. Now what do? Well, the fact of the matter is I am not really interested in buying here. What I am interested in doing is letting the pattern prove itself. Let it prove my opinion right, that is the bottom and the bottom is in. How do we do that? Well, take a look here. Take a look at what we're anticipating happening. What we're looking at is we're looking for, here's the bounce, takes off. And then oftentimes it will hit a new high. It may stay in line with the trend that's going down here. And then it rebounds and comes back into this low here. This is the retest. And especially if you have positive divergences on your momentum indicators as it falls back down towards this past low to retest it, that's a good time to just hold on and wait for it to do one of two things. Break out and then break back up through it, hit right at the level and then bounce up, or oftentimes it will hit a little bit short and then go rebounding, take out the trend line, and it was this retest that actually turned out to be the higher probability trade. We see a lot of charts doing this type of pattern. Will we see it in the current bear market that the indexes are in? Because you'll see this pattern both in the indexes themselves and the stocks and other ETFs. It does it quite often. You see it most often on daily charts. So let's go ahead and jump over and take a look at some of the daily charts to see what the heck that does in fact look like. So here I'm looking at the NASDAQ, or the Qs. The Qs are the ETF representing the NASDAQ, and as you can see, we have just come down into testing a past level of support, which happens to be the 200-week moving average. But I'm going to be looking primarily over here at the daily chart. What's happened on the last few downsides? We've bounced down and then came back up into a level of past resistance, reversed down, came back, retested the moving averages. Now we're basically putting in looks like we're putting in a bottom. And you have to remember that oftentimes bottoms are events. Topping tends to be a process. What am I to expect here? First, you have to know what to expect. And since this is a strong downtrend, my expectations are, until we take out this downtrend line right there, I'm going to remain in a downtrend. So here's my expectations, is for prices to bounce from here, back up into the 20-day moving average, and it's right at the 8-day moving average, or maybe all the way back up to that downtrend line right there. And then do what? Come back and retest. How long is that going to take? Well, typically it will take somewhere between 8 to 10 days approximately. If I were to buy right now, or buy if on a pullback into today's candlestick, what should I expect? I'm expecting a very small move back up into these areas here. How do I know it's time to really go in more seriously with the trade? Well, look to your left. What did it do the last time? And when I say look to the left, here's a similar type pattern that we see going on there. The market had also fallen from the sky, hit a new low, TSI crossed up to the upside, similar to what it's doing right now. TSI crosses up to the upside, but look at the pattern it puts in. Now, I may have missed this, but it gives a perfect example of what that we can expect. One, we get a reversal signal, we get a TSI or momentum shift. It runs up and runs into resistance at past resistance or one of the moving averages. Then comes back down and does its retest. It's this retest that we want to be very much paying attention to. And sometimes what we'll get, you'll get 2 retests and then it goes from there. And so that is basically the tip, and the secret that we're looking for is how often does this happen? About 65 to 75% of all stocks that hit the new low, in fact, bounced in the same kind of way. It will basically bounce down and then retest after the recovery. This is a rally attempt, retest, rally attempt, retest, and then finally, this is going to break out from there, retest, and it was off to the races from there. How far did this run on after the move up, the second move up, this one here? Because you could actually, there was a couple of different areas to enter. Enter here, and it ran up to, pretty interesting, 18% in 44 days. For a non-leveraged ETF, that's pretty darn good. How about it if you would have been late to the party over here? About 16% in 33 days. But let's say you were just patiently waiting for the signal. How long did it take to get your second signal? Well, we had our trigger here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, and then you get your reversal signal. Then what about on the next pullback? 1, 2, 3, 4, 5, 6, 7 days, and then you get your reversal, 8 days. So somewhere between, I would say 7 to 10 days, once you put in your initial lower low, and then it starts moving its way back up, proving itself that it is in fact going into a strong uptrend. So that basically covers it, guys, and exactly what to do. The issue is we wait until I come down here and then take it from here if I miss this move here. Let's say you want to nibble at this bottom over here. The way I would look at trading that is I would do half a position here and be ready to take profits at one of the moving averages. The 8, the 20, or even the 34, or sometimes the 50-day moving average. And be looking for that reversal signal. With my momentum shifting, it was telling me, hey, I'm ready to rock and roll. So then it gives me 1, 2 additional opportunities to get into the trade. So that's what we have for today. I hope you enjoyed that. And as Jesse also likes to say, if there is no setup, there is no trade. So buy right, sit tight. And so, hey, just a reminder that all materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance, of course, is no indication or promise of future performance. And as the founder of Active Trend Trading and AutoPilot Trading, I want to say thank you very much for joining for this quick update. If you will, please subscribe to the YouTube channel, and leave some comments. I love to discuss what's going on in the market, so leave some comments. Let's open up some dialogue. Want to help you to become a better trader as you help me to become a better trader. So feel free to share the content. So aloha, God bless everybody. Looking forward to the retest of the lows from yesterday. Aloha. God bless everybody.